Good morning and welcome to T-Hub Capital, the Investors Lounge, the podcast where we explore financial market dynamics, emerging trends, and the insights that shape successful investments. Each week, we'll delve into the strategies and analyses that drive our investment decisions. You'll get an insider's perspective on the factors influencing markets and the potential winners and losers of tomorrow. Subscribe to the podcast to stay ahead of the curve and make informed investment choices. Enjoy listening.
Welcome to T-Hub Capital's The Investors Lounge weekly newsletter. Today's date is May 13th. Let's dive into the week's stock market news. European stocks soar amid optimism, driven by better-than-anticipated corporate earnings and hopes for major central banks to cut interest rates soon. European stocks experienced significant gains. The Pan-European Stocks Europe 600 index rose by 3.01%, with major indexes like Germany's DAX, France's CAC 40, and Italy's FTSE MIB also showing sharp increases. The UK's FTSE 100 even hit a new record high, climbing 2.68%. Bank of England signals potential rate cut, while the Bank of England, BoE, maintained its key interest rate at 5.25%. It signaled the possibility of easing policy as early as June. Two members voted for an immediate rate cut, and Governor David Bailey hinted at greater reductions than market expectations, contingent upon incoming data. The BoE also revised its economic outlook, predicting inflation to fall to 1.9% in 2026 and 1.6% in 2027. UK exits recession with strong growth. In positive news, the UK economy grew by 0.6% in the first quarter of 2024, defying expectations and ending the recession that began in the second half of last year. This growth was fueled by expansion in the services sector and increased production. Sweden cuts rates for the first time since 2016. Sweden's central bank, the Riksbank, lowered its key interest rate by 0.25% to 3.75%, marking the first reduction since 2016. The bank indicated that if the outlook for slowing inflation continues, it could implement 2 more rate cuts in the latter half of the year. Now our insight into alternative markets, the rise of private assets, navigating shifting economic tides. Private assets complement the 60 by 40 portfolio, while the traditional 60 by 40 portfolio, 60% stocks, 40% bonds, had a good year in 2023. The high correlation between stocks and bonds is prompting investors to seek diversification through alternative investments, particularly private assets. Institutional investors are increasingly allocating to private equity, private credit, infrastructure, and real estate, with many planning to maintain or increase their allocations in 2024. Private equity, in particular, is seen as having the potential to deliver superior long-term returns, even in a higher interest rate environment. Focus on quality and due diligence in private equity. Despite concerns about potential oversaturation in the private equity market, institutional investors remain optimistic due to the potential for outperformance compared to public markets. However, they are becoming more selective and emphasizing quality in their investments, with increased due diligence in deal analysis. The secondary market is emerging as a significant source of investment opportunities as investors look to rebalance their private equity portfolios. Private credit fills the gap left by traditional lenders, as traditional banks tighten lending standards amid higher interest rates and increased regulatory scrutiny. Private lenders are stepping in to meet borrower demand. Institutional investors anticipate a surge in private debt issuance in 2024, particularly in commercial real estate, where refinancing needs and cautious traditional lenders create opportunities for private capital. Competition for new deals is expected to be intense, with many investors planning to increase their private debt allocations. In conclusion, private investments continue to be a crucial component of investor portfolios in 2024. The focus is shifting towards quality and due diligence in private equity, while private credit is gaining prominence as traditional lenders pull back. The evolving economic landscape is creating new opportunities and challenges for investors in the private markets.
Thank you for listening to this episode of Hub Capital, the Investors Lounge podcast. I hope you found this content interesting and inspiring. If you enjoyed this episode, don't forget to subscribe to the podcast so you don't miss a single episode, and share it with your friends and colleagues who might be interested. To learn more about T-Hub Capital and our activities, visit our website, thubcapital.com. You can also follow us on our LinkedIn page. See you soon. All the best from the T-Hub Capital team.